Banks make more money when you lose, and worst of all, they're hoping you never find out what you're about to hear. If you think you understand how credit works, this video might destroy everything you believe. And if you stay until the end, you'll never look at credit cards, loans, or your credit score the same way again. Get ready, because this isn't theory. This is the real game. 10. Your credit score isn't about you. It's about how profitable you are. You think your score measures responsibility? Wrong. It measures how predictable and profitable you are. Banks don't want perfect customers. They want customers who pay, but also generate interest. The guy who pays everything in full, he's not that interesting. Now let me ask you, have you ever noticed that even when you do everything right, your limit doesn't increase? That's not a mistake. That's strategy. They increase your credit slowly, testing how far you'll go without breaking. And here's the hook. The next point shows exactly how they keep you trapped in this cycle without you realizing it. 9. Paying the minimum is the perfect trap. It looks like help. It's actually a silent trap. When you pay the minimum, you're basically telling the bank, go ahead, keep charging me insane interest. And the worst part? You can spend years paying off a small balance and end up paying 3, 4, even 10 times the original amount. Now think, why is that option always highlighted? Easy, convenient. Because that's where banks make the most money. And it gets worse. The next thing you'll discover explains why so many people fall into this without even noticing. 8. A high credit limit is not a reward, it's a test. When your limit goes up, you celebrate. But you should be cautious. A higher limit means 2 things. The bank trusts you'll pay. The bank expects you to spend more. They know that psychologically, the higher the limit, the more you spend. Have you ever felt richer just because your limit increased? That's not random. That's behavioral design. Now be honest. Have you ever spent more just because you could? Hold that thought. Because the next point shows how even your smallest purchases are being used against you. 7. Small purchases build massive debt. A coffee here, an app there, a forgotten subscription. Nothing seems big, but it all adds up strategically. Banks know you don't worry about small expenses. That's where control slips. At the end of the month, you look at your statement and think, how did it get this high? It wasn't one big purchase. It was dozens of small, invisible ones. And here's the shocking part. That's exactly what they want. Now get ready, because the next point reveals something almost no one understands about interest. 6. Interest is confusing on purpose. Have you ever tried to calculate exactly how much interest you're paying? Not easy, right? APR, compounding, fees, minimum payments. It all feels intentionally complicated. Because it is. The harder it is to understand, the less you question. And the less you question, the more you pay. Simple. So let me ask you, do you actually know how much interest you're paying right now? If not, you're already playing on their field. And the next point gets even crazier, because it involves how they reward you. 5. Rewards programs aren't gifts, they're bait. Points, miles, cashback. Sounds amazing, right? Here's the truth. You're being rewarded to spend more. You're not making money. You're being nudged to spend in exchange for rewards that are often worth less than you think. Real example. You spend thousands to earn points that are worth far less in return. And the bank profits from every transaction. Now think, have you ever bought something just to earn points? If yes, it worked perfectly. And the next point will show how even paying on time might not be enough. 4. Paying on time doesn't make you an ideal customer. You think being punctual puts you at the top? Not always. Customers who pay everything in full, without interest, are the least profitable. They're good, but not prioritized. Now those who carry a balance and pay interest, those are valuable. Does that mean you should go into debt? No. But it does mean the system doesn't reward perfection the way you think. And that leads straight into the next point, which could completely change your strategy. 3. Having too much available credit can hurt you. Sounds backward, but it's real. If you use a large portion of your limit, your score can drop, even if you pay everything on time. This is called credit utilization. Banks want control, not dependency. Now think, have you ever maxed out your card knowing you'd pay it off later? To the system. That's risk. And the next point shows how simple decisions might be silently hurting your score. 2. Closing a credit card can backfire. You want to simplify your finances, so you cancel cards. Seems smart, but it can lower your score. Why? Because you reduce your credit history and total available credit. Result: your utilization increases and your profile looks worse. This catches a lot of people off guard. Now brace yourself, because number 1 changes everything. 1. The system was built to keep you playing, not to set you free. This is the truth no one tells you. The credit system wasn't designed to make you wealthy. It was designed to keep you using credit. The more you participate, the more you fuel the machine. And the more you fuel it, the more money they make. It doesn't matter if you earn rewards, limits, or perks. If you're constantly using credit, you're inside their system. Now here's the most important question in this entire video. Are you using credit, or is credit using you? Because, after everything you've heard, ignoring this might be the most expensive mistake of your life. And in the next video, what you're about to discover might completely change how you see money forever, and you may never make the same mistakes again.